Look at Lecture 7, Part 2, Globalization and Free Trade. So let's get specific on some free trade issues here in terms of what we're talking about in terms of trade liberalization and opening up markets. Okay, so why do all us economists promote free trade? And the simple reason is because free trade creates value, right? It's the roundabout way to wealth, we say. Well, why is it roundabout? Well, if China can produce a good cheaper and sell it on the global market, we value this good more than folks in China, and suppose we value this good more than folks in China, then we pay a higher price, and value is created by trade, right? Low valued uses go to high valued uses, and we pay the price for that. US consumers gain, Chinese producers gain. We pay a lower price than we would pay from local producers. And China wins because they receive a higher price than they would domestically. So it's win-win. Well, who are the losers in this? Well, the domestic industry, who can't match the dollars, the quality per dollars of foreign competition. Now, is this a zero-sum game? Absolutely not. Because what happens is we've created value through the trade. US consumers are winning. Chinese producers are winning. And is it really a loss to the US? Well, in terms of welfare, it's not. It's just a transfer from consumers to producers. But it is a change in jobs. And that there is the rub. When you start talking about a change in jobs, it's not abstract anymore. It's very concrete. Back when I graduated from undergrad in 1980, I lived up in northern Minnesota, and there the economy was going through what Wyoming is going through now. Back then, we made all our money selling iron ore or taconite for steel, just like right now Wyoming makes a lot of its money selling coal, oil, natural gas for energy. And as the iron ore mines started shutting down and the taconite mines started slowing down, there was a big flushing sound up in northern Minnesota. So Duluth at the time I was there had 110,000 people roughly, and in 5 years it was down to 85,000. So 25,000 people essentially got flushed out of that economy, including me, because I was not planning on leaving, just like many of you are not planning on leaving Wyoming or wherever you grew up. Next thing I know, I was a carpenter out in Las Vegas because that's where the jobs were. Now, was I a loser because I couldn't find a job up there? Well, yes and no. In the short run, I definitely was not happy about the idea of moving. In the long run, I'm a professor, and I've done way more with my life than I ever expected I would. So, looking back, I'd say on net, I'm a winner. But, not everybody has that kind of luck. Some people get stuck. Some people get stuck in that transition, especially think about, if you're a 50-year-old man or woman and you've trained to be, say, a mill worker of some type and it shuts down, or you've trained to be a miner of some type. What are you going to retrain to be in your 50s or 60s? A nurse? A teacher? A long haul truck driver? I mean, what's your next best alternative? So even though 99% of all economists promote the idea of free trade, we are tone deaf a lot of times on these transitions that come with free trade and the shift in industry. And I accept that, and we'll come back to that towards the end of this lecture. So do countries with lower trade barriers grow faster? Yes. A 1% increase in a country's trade to GDP ratio increases GDP by 2% per capita, GDP per capita. So if you're trading more, GDP is growing more. I mean, there's a little bit of a chicken and egg. If you grow more, do you trade more? If you trade more, do you grow more? But the idea is trade and growth move together. So why do so many politicians then argue against free trade? Well, here's some definitions. An autarky is a closed economy with no trade. Do it yourself, with this economy. And that would be like Laramie deciding we're only going to eat what we can grow in Laramie. Well, we'd be pretty hungry. I mean, we'd be out trying to get poaching antelope and mule deer and trying to grow potatoes. And a few of us would have good gardens and some of us wouldn't. But if we had no trade, we certainly wouldn't have very many fruits and maybe some apples, right? And some berries, choke cherries. But for politicians, that can be okay you can if you can get enough votes that says we take care of our own, we're going to protect ourselves. Protectionism is the term where you put up trade barriers with either quotas. We're only going to let in 1,000 cars from Toyota that are made in Japan, right? Or tariffs, which is the same as a tax. You raise the price of an import. So if we import grapes from Chile and we double the price once they get to the US because of a tariff, well, then that's going to restrict sales and restrict trade, and it's going to gobble up consumer surplus, even though it'll help protect any grape growers in the United States. It protects our jobs from foreign competition. So the trade wars, we've been getting into quite a few of them with Trump and his abrasive style about us versus them, and how previous administrations really have been chumps because of how they traded. It's a sports analogy. It's a Super Bowl, we win, they lose, and it's a transfer value. And that's not what economics is all about, right? Economics is about making the pie bigger. It's not a zero sum world, and we're not competing over a fixed prize. No, you get richer by increasing your productivity. Full period. We've already talked about that. Trade is a way to create value by finding where things can be made the cheapest and letting them reallocate to where people want them the most on the free market, right? So, do you need to be relatively more productive so we can compete? No, no. The more productive another country is, the richer they are, so they can buy our stuff and we grow even more. So, we want other countries to be productive because they'll be richer and they'll buy things we sell in the US. And it's a positive sum game. Now, this was really pushed way back in 1790 by an economist or a thinker, I guess is a better word for it, David Ricardo. And his argument, he lived in the United Kingdom, was that the most fertile land is the most productive and it creates the most economic value, right? So, output per labor hour. So, if you got really good land, really good soil, you got water, boom, you're going to grow a lot of corn or whatever crop you're growing, whatever, you're going to produce a lot of cattle. So, who captures this value? The landowner, the laborer who works the land, or the capitalist who provides the machinery? And the argument Ricardo had is it's the landlord every time, the landowners. The laborers, they're going to compete their wage down. The capital provides the machinery are going to drive the price up in terms of competing away the rent. But the land owner, and they are the only ones with a fixed good. There's no more land unless you go off the island, off the British Isles, and go somewhere else. And so the rents are all going to be captured by the land owners. Laborers drive down wage, capitalists drive down their rents because they're competing by providing capital at a cheaper price. The landowners, and that would capture all the rent. And that was true in Laramie for a long time before a lot of these different apartments lined up. If you came to Laramie, there was only so many landlords, and you paid their price if you wanted to live in Laramie, right? So the idea is that there's no substitute for land. So landlords in a landlocked country control all the value created by domestic trade. He just raises the rent. You've got nowhere to go. And Ricardo argued that only with free trade in a global market would you break this stranglehold, because now you could trade with other people in other countries, France, Spain, Africa, the United States. And now the landlords would have to compete across the globe. They could not just sit there like a monopoly and suck up all the rents. And essentially, it would break this monopoly of the landlords. And so the push for free trade really was the realization that the rich get richer, and here is one way for to break that notion of the rich land owner simply getting richer because people had no place to go, and labor competes away their gains and capitalists compete away their gains, and all the money goes directly to the landlord. So let's jump now to 2020. Given COVID, world trade really did fall sharply in the first half of the year. Um, Government responses around the world, they printed money and they just sent it out to everyone. Many of you might have gotten your $1,200 check back at the end of the spring. And the World Trade Organization now believes that even though there was a steep decline, it's not going to be the worst case scenario, which is this red line here, which would be a significant drop, right? So here it starts at 2005 over here. So we're over here in 2020, right at the start. Things were going pretty good in terms of trade volume. And you can see the blue line is what actually happened. The green line is a rosy scenario. The red line is a pessimistic scenario as what likely is going to happen over the next few quarters in terms of trade. So the blue line is where we're at. And so we're falling somewhere right in here. And the worst scenario is not likely to be seen. You can see this in terms of commercial flights tracked per day. You can see the significant drop in those, going from upwards of 11,000 per day down to, 110,000 per day down to near 30,000 per day. Significant drop. Global shipping containers, again, you can see a significant drop in the amount of shipping containers, so a level back to where we were in 2016 in terms of world trade. Now, the silver lining, well, the director of the World Trade Organization said, yeah, it was big, but it could have been worse. So, it's kind of like the argument, yeah, you just cut off your finger, but you could have cut off your whole arm. So don't complain. I mean, it's not great not having a finger, but it would have been way worse if you didn't have an arm. So this is the old classic of redefining the benchmark to say it could have been worse. But the truth is, it could have been worse. So it's uncertain what exactly is going to happen. The most optimistic range is maybe a drop in world trade by that'll lead to a decrease in global output by 5%. That's a significant drop considering, what we've seen over the last 2 decades. We've seen, booms, basically booms with one major recession, some minor recessions, but one really major recession over the last 2 decades. So if we're going to think about 6 targets for trade in this post-COVID world, right, we have to think about what it means in terms of how we're going to get trade going again, given all the pressure to social distance and social isolation. And these are 6 issues that the World Economic Forum thinks are very important to get people to talk about again to recharge how trade goes. Some real resilience in trade. So you need supply chains, and they need to be robust, and you need to be able to recreate this network of trades that sort of unraveled with COVID. And as you start pushing in more tariffs and more quotas and more protectionism, it's not going to help that process. Subsidies and industrial policy. I mean, governments are going to have to inject money into the economy in order to rebuild this web of trade, right? And these interventions can help save jobs. Yep. There's also the issue that it's going to be a lot of wasted money, especially if it's going to cronyism and corruption and it's just being put in people's pockets who are not doing anything with it other than getting richer. So there is a downside of that. You got to pay attention to that. Including everyone, you know, I kind of wonder about this one in the sense if you're trying to build trade back up, you're really worried about economic efficiency. If you're trying to build trade back up while worried about equity, it's like trying to build trade up with one hand tied behind your back, right? Because I mean, economics ultimately is interested in growing the size of the pie, efficiency. If you want to put conditions on how you grow the pie, yeah, that's harder because now you're saying there is smart growth or there's green growth or there's socially aware growth as opposed to just sort of unregulated growth. Well, if the goal is to grow the economy, unregulated growth, of course, is the fastest and it's the short run solution. The long run solutions of including these social values become much trickier, and then it becomes less economics and it becomes incredibly political because, you know, your social goal is not my social goal, and my social goal is not your social goal. And now we're back into the world of progressives and conservatives and fighting over including everyone. What does that really mean? Same with green trade. The idea here is that not only can we redo the web of trade, we can redo it in such a way that it protects the climate at the same time. Again, that's trickier because you're trying to solve two problems with one tool, you know, and that's always hard. If you have a nail you have to nail in a wall, and you have a bolt you need to tighten up, you can't use a screwdriver for both of them, and you can't really use a wrench for both of them. You need two tools, a screwdriver and a wrench. I mean, maybe you can figure it out with duct tape or WD-40 or something, but you really need, if you got two problems, if anything economics taught us, you need two tools to try to fix it. One one tool for two problems doesn't always work. I mean, that's just a common sense, and it work. And the same common sense applies here to how we think about it. Simplification, sure. If we can digitize and streamline processes and make information easier to find, it's always good. Again, that's a political challenge because politicians like to keep their thumb on what's coming in and out of their country. And services regulation. Well, here they're just talking about trying to figure out how to free up digital services, how to free up the web so it's even more useful, and China can't just shut down the web because they don't want certain information coming in. Well, they can, but we're trying to reduce that in order to have the free trade of ideas as well. But that one's all six of these are pretty political, um, and unlikely, in my mind, to allow free trade to really take off. This is more like a slow revival of free trade after COVID rather than a fast one. What about trade deficits? In the U.S., trade deficit in July is the largest since 2008. So Trump came in 2016 with the idea that our trade deficit was a bad thing because it showed weakness on our part. It showed weakness in the sense that the Chinese and everybody else were taking advantage of us, and we were losing manufacturing jobs. Uh, yeah, again, this is this us versus them. And the idea is whether a trade deficit really matters. So let's take a look at the economics of a trade deficit. So when the imports are greater than the exports, then we've got a deficit. We're importing more than we export. And by imports, I mean just buying products from another country, and exports is us selling products to another country. If our exports exceed our imports, we got a surplus. We typically run a deficit. We import more than we export, right? So is this really, really a problem? Um, Here's the article I'm going to take this next bit from. Greg Mankiw is a conservative economist at Harvard. He was a Council of Economic Advisors for President G.W. Bush. Smart guy. Um, so there is some real confusion about trade deficits from an economic perspective, right? I mean, we've tried to argue that trade is good and that deficits by themselves don't really signal you're a bad trader, okay? So what's going on? So let's take a look at the example he gives. Right? If imports exceed exports, we're running this trade deficit. And this is, according to President Trump, this is a sign we're the losers. Okay, so let's consider his example. So suppose my family goes to dinner. We pay the restaurant money, we get a meal, right? So I'm running a deficit, a trade deficit with that restaurant. But does that make us losers? I mean, no. I mean, we leave full and happy. We got a good meal. Sure, I'd like to have a balanced trade. I mean, I'd be great if every time I went out for dinner, the people who own the restaurant bought one of my books, bought, one of my CDs, bought something from me, and so that at the end of my dinner, not only did I eat, they bought one of my products, and we're balanced. But I mean, there's no reason for me to boycott the restaurant if they didn't do that, because I can run a trade deficit with that restaurant because I run trade surpluses elsewhere. So in Mankiw's assessment, the New York Times pays him for his column. So he runs a trade surplus with the New York Times, gets money from that. That surplus then balances out with his trade deficits. So you have to look at it in aggregate. So just looking at the US versus China and saying, we are running a deficit, well, so what? Because I'm running a surplus over here on trading with Sweden, or I'm running a surplus over here trading with Russia, or I'm running a surplus over here and trading with other folks. Just because I run a trade deficit with China doesn't mean I'm losing in my relationship with them. It just means that I'm finding way cheaper products in China to buy and bring to the United States than the opposite story. And that's partly because China's not as rich as the United States. So, yeah, no, bilateral trade deficits don't matter, right? So just bilateral being just me and you, one on one. Those don't matter because you have trade surpluses elsewhere. Now, and the overall trade deficit does matter, but not for what it says about trade. It's really more about if the whole U.S. trade balance is negative, total imports have exceeded total exports, does it mean that we're really losers? Well, no. We're spending more than we're earning. We're just savings. Is that a problem or not? Well, it's really going to depend on whether we're spending like crazy, like drunken sailors, as they say, or if we are running a debt so that we can get what we need so we can improve our economy in general. It's just like me taking a mortgage to buy a house. I mean, I'm in debt to the bank because I owe money to the bank for this house. But am I better off? Yeah, because I have a house. I got a place to put my kids, my dogs, me. I got on net, I'm better off. So a negative trade balance in and of itself doesn't make me a loser. It makes me prudent in the sense that over time, that is going to pay off for me because I have figured out a way to um, collect equity, at least in this house. And the same argument goes for a country. But for a country, the thing is that's different than a family is at some point, I'm gone. I'll die. I'll move on. That's it. But the country's going to be there. And so running a deficit for longer than your lifetime or my lifetime or another lifetime, well, the country is going to, it's been here 200 and X amount of years so far. And it's going to be here for a while longer, we think, we hope. Right. And so the idea of a deficit having to be resolved every year doesn't make sense either, because this is a country that extends for an indefinite period of time. Right. So it's not, this yellow part here is really the key. It's not disreputable trading partners. It's a deficit is a problem only if it comes from poor financial planning. Right? I mean, if you ate at expensive restaurants too much, you should blame yourself, not the restaurant. The restaurant's there to take your money. Right? If you can't control yourself in terms of your spending, don't blame who you're spending it on. Blame yourself for not being able to control yourself. If you buy yourself a Lamborghini when you should be buying a bicycle, I mean, who do you really got to blame? All right. So if you really want to reduce a trade deficit, you should bring down your spending relative to production and not demonize trading partners around the world. And if you really want to increase your exports relative to your imports, be more productive. You can't rest on your laurels. You have to be more productive. The more productive you are, greater output per hour spent, the more wealth you have, the more well-being you have, the more you may have products to sell elsewhere. So, yeah, a couple things. I'm not a fan of the trade war idea. I'm not a fan of this deficit representing losers. Um, yeah, okay. People go into debt, no doubt, and people also um, have bilateral trade deficits, and they may have an overall trade deficit, but the time horizon is much different. I'm just not thinking of when you start slapping on a tariff, you start slapping on a quota. Now you're restricting trade and now you're restricting opportunities because likely you put a tariff on China, they're going to put a tariff on us, which is exactly what they did on soybeans. And the farmers in the Midwest were not happy. All right. So there's lots of reasons to understand this notion of a deficit, but not in the simplistic reasons of that we've been taken as suckers, right? It's a different story than that. It's poor financial management versus this idea that we're just poor negotiators. No, they're two different issues. So is it a fake problem? Mankiw says, in many ways, the trade deficit is a fake problem. And it really is a secondary concern, right? And so avoiding a tariff war is really a major concern because that just restricts the economic pie. But by calling it a fake problem, this is why a lot of people don't like economists, right? It's not a fake problem to people who lose their jobs. So, or other people who suffer in transitions of unemployment as, industries move abroad because of cheaper labor or unregulated environmental policies or lack of civil rights, right? And so if an economist is treating the economy like a doctor treats a disease without a bedside manner, it's easy to view economists as this cold, bloodless social science, right? As long as the winners win and the more than the losers lose, this all is going to work out in the long run. And famous economist, of course, said, in the long run, we're all dead. Yeah, that's true. But again, economists are supposed to study the economy, not so much the suffering of people in the transition as we move from one economic state to another. We can, but we're going to say as long as the winners win more than the losers lose, this is going to work out in the long run. If I keep repeating that long enough, I'm going to sound like an economist. If you repeat that long enough, you're going to sound like an economist. And we may or may not have very many friends in the short run because we sound pretty cold-blooded when we present problems this way. Okay? All right.